Hi everyone, let's start with the revision of chapter number 11, which is called as Ethics and Terms of the Audit Engagement. Very simple chapter. I am always of the view that in auditing, chapter number 1, chapter number 2, chapter number 6, and chapter number 11 are extremely scoring, and this is chapter number 11 for you in the syllabus. Okay, now let's start with this. This chapter has a lot of discussion points, so I'll be taking you through the main areas in this. First of all, what is ethics? Ethics means moral principles which govern a person's behavior, and it is a sign of morals in human conduct. Okay. Second, need for professional ethics is why it is required, because any person who keeps his own interest below and he keeps the society's interest at a higher level earns respect and honor in the society. So they have written here, human nature being what it is, a man often places his personal gain above service. Therefore, as individuals and as a class are willing to place public good over their personal gain, have enjoyed respect and honor. Next, a chartered accountant in practice or in service has to abide by ethical behaviors, and he has to follow something called as fundamental principles of professional ethics, and which I keep saying that this ethics part is mainly covered in CA final. So when you come to CA final, you will be learning something called as code of ethics. Okay, let's go further. Now here is a very important answer according to me, that is principle based approach versus rules based approach in relation to ethics. See, rules means as per law, and principles means based on what you think is right or wrong. It is possible that many a times law will not cover the entire area of what a human should do in a given situation. Sometimes law may not cover some aspects. So in those cases, a person has to think from his own angle and he has to see whether what I'm going to do is right or wrong. And if he thinks that it is wrong, he should not do it. Even though law may allow it, but still you should not do it because it is wrong. That is what they have said here. See, you have to always keep the spirit of the code in mind. And spirit of the code is nothing but the principle-based approach. Okay, let's go further. What are the fundamental principles of professional ethics? Very common, important answer. So in that we have done a code called copy, confidentiality, objectivity, professional competence, professional behavior, and integrity. Okay. After that, we have the next area called as independence, which you can see here. Independence is of two types, that is independence of mind, and of course, you have something called as independence of appearance. Okay. Now, independence of mind is nothing but giving an opinion as an auditor without being affected by influences of others. You should act with integrity, objectivity, that is unbiased approach, and you should have professional skepticism, that is a questioning mind, alert to situations, critical assessment of evidence. All these things should be there. Okay, let's go further. Next is the independence in appearance. In independence appearance, you'll understand that a person should have a reasonable and a person who is reporting to a reasonable and informed third party. That third party, in the case of auditor, it is the shareholders. You are doing the audit of the client, that is a company, but giving report to the shareholders. The shareholders, in the shareholders' eyes, the auditor should always appear to be independent. From the shareholders' perspective, the auditor should always come out as a very independent person. Okay, so that they have given here, PC here, that they have written here that any third party would not reasonably conclude that the firm or the member of the assurance team integrity, objectivity, professional skepticism had been compromised. So in the eyes of the shareholders, your integrity, objectivity, professional skepticism should not be compromised. It should be at a very high level. Okay. Next, independence is a very subjective matter. It is given. It is therefore the duty of every chartered to determine for himself whether or not he can act independently in the given circumstances of a case, and quite apart from the legal rules, in no case to place himself in a position in which would compromise his independence. The CA should not allow his independence to get compromised. Okay, let's go further. Next, what are the various threats to independence in any matter? So in relation to audit, threats to independence can happen because of which reason? For that, first of all, what is threats to independence? Threats to independence is any situation that does not allow the auditor to give the opinion that he should ideally give. So what the auditor would have given as his opinion, but because the situation is such that he will not give his opinion in that manner, that is because of something called a threats to independence. There are five type of threats. Okay, first is called self-interest threat. The second one is called self-review threats. The third is called advocacy threat. Just a second, please. Advocacy threats. Then you have intimidation threats, and finally you have the fifth one, and that is called as familiarity threats. Okay. Now let's see this properly. In your self-interest threats in the class, we had done the examples very nicely. So basically, wherever the CA may put his self-interest at a higher level, and he may not comply with the requirement of independence. For that, we did a code called BCDEFG. So you know business relationship, then contingent fees, then dependence on the client's fees, employment with the client, financial interest or materially significant, indirect financial interest in the client, and finally guarantee or loan area is here. Okay, that is called self-interest rate, BCDEFG. Then we had done all these examples we had done in the class. So if you remember all these examples we had done in the class, and now we enter the familiarity threats part. This also has examples which are important. You can see here, this can occur in many ways, and they have given the ways in this part. Okay, let's see this first. Close relative of the audit team working in a senior position in the client's company, long association between the auditor and the client, acceptance of hospitality and gifts from the client, and finally, any partner becoming the director or a senior person in the client's company. Okay, now this is what we have done in relation to familiarity threats. Okay, let's go further to the next area. Let's see this safeguards for independence. For this, we have done a small tune that is con key desist from the task or put in place safeguards. We'll just repeat it again. Con key desist from the task or put in place safeguards. Con key desist from the task or put in place safeguards. Simple. So this we have done in the class. Safeguards for independence. Okay. Let's go to the next one. Professional skepticism. Professional skepticism, as I told you, is an attitude that includes questioning mind, alert to conditions, and also critical assessment of the audit evidence. That is what is your professional skepticism. Now, for professional skepticism, we had done a song in the class, and that was "Dil hai chota sa choti si aasha," if you remember. Okay, so let's sing the areas which are mentioned in this part. That covers the song part. So we'll sing. You have to mainly focus on the areas which are circled in yellow, and any other extra word is there. I'll be circling it as the song goes. So let's sing it. दिल है छोटा सा छोटी सी आशा na 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 na. The song goes in this tune, correct? So the song, the um, way we are going to do is in this manner. See this. Unusual circumstances, specific conclusions, appropriate assumptions, includes being alert to documents reliability, evidence contradictory, fraud possibility, circumstances for AAP, दिल छोटा सा Choti Siyasha. Okay, the song was in this tune. Okay, that is basically this part. Very simple, easy to remember also. Let's go further. Let's go to the next area. Then after that, we had done Asset 210, that is agreeing the terms of the audit engagement. It had three answers. First is called preconditions, second is called engagement letter, and the third one is no revision in EL is required unless there is a situation of most changes in flow. So we'll cover the answer here itself. What are the preconditions to an audit? The auditor should first check whether the client has prepared the financial statement as per FRF, that is financial reporting framework. Management should have an agreement that FS is as per AFRF and internal control as the management considers necessary is there in place. Management shall provide the auditor with all information, additional information on request and unrestricted access to any person. Okay. Engagement letter should contain some details that is called the code is called ORID form. That is objective and scope, responsibility of the auditor, responsibility of the management, identification of AFRF and expected form and content of report. Okay. Normally, the engagement letter is not revised because the auditor is appointed for a period of 5 years. That is from the first AGM to the sixth AGM, as you know very well. So normally the engagement letter is not revised. However, when there is a situation of most changes in flow also, we revise the engagement letter. That is misunderstanding of the objective, special terms or revised terms, changes in financial reporting framework, changes in legal regulatory requirement, changes in objective, changes in ownership, changes in nature and the size of business, changes in senior management, and changes in other reporting responsibilities. Okay, in that case, let's go further. After that, we had done the next part, that is, we had come to this part here. Sir, before the auditor gets appointed, what is his duty? So before the auditor gets appointed, the auditor should ensure that there is no limitation of scope imposed by the client. If the client imposes limitation of scope, auditor should not accept the engagement. However, in one situation, the auditor can accept it where it is required by law or regulation to do so. So normally, if there is a limitation of scope that the client imposes on the auditor before the audit work starts, or before signing up with the client, you should not accept the engagement. And if it is required by law, if law is allowing it or if any regulation is allowing it, then you can go forward and you can take up the client's work after following the required legal procedures. Okay. Next, after the auditor's appointment, the client is putting some restrictions on the auditor's work. Then the auditor should request for change in the engagement letter due to any circumstances, misunderstanding, or restriction on scope. Okay. Okay. If it leads to lower level of assurance, so I'll rephrase this point again. If the client, I'll rephrase this point again once again. If the client says that I'm requesting a change in the engagement letter, then auditor should ask the client. It was a mistake from my side. Auditor should ask the client what are circumstances, what misunderstanding is there, what is the restriction or scope that the client is imposing, and the client has to be very clear in that. Auditor should then check whether it leads to lower level of assurance. If it leads to lower level of assurance, then in that case the auditor should ask the client for reasonable justification. If it doesn't lead to lower level of assurance, in that case the auditor can easily accept the change in the engagement letter. So if the client is asking for you to change the engagement letter that is already signed, you will see whether it leads to lower level of assurance or not. If it leads to that, then you will ask for reasonable justification. If the client gives a reasonable justification, then you will go ahead and do the work. You will record the new engagement letter, audit work will be performed, and you will issue the report. And while issuing the report, you will be careful that you don't give any reference in the report that there was an original engagement letter. All these references you will not give. Any procedure that may have been performed in the original engagement, that reference also you will not give, because we don't want to confuse the shareholders. If it leads to lower level of assurance and the client is not able to give you reasonable justification, then the auditor should not agree to change in the engagement letter. If the management doesn't agree with this and the management insists on the change in the engagement letter, then in that case the auditor should withdraw from the engagement and determine his legal obligations. That is what they have given. Okay. Let's go further. Let's see this. Now after that we went into the next part, that is in relation to the SA 220 part, that is elements of system of quality control. Now this has a close relation with SQC1. SQC1 is basically what the firm should comply with, and SA 220 is what the auditor does his work to perform when he's working with the client. He has to have quality control in place. Now in the case of a CA firm, the firm should comply with SQC1, and when the auditor does his work, he should ensure that quality is there in place. That is basically what is given here. Okay, here it should be quality. One second, quality should be there in place. Okay. Now let's go ahead in this part. Let's see this, please here. So what are the elements of system of quality control? Remember, my dear student, we have done something called as a farmer story. So let's go with this. So first the leadership responsibilities, then you have ethical requirements, then acceptance and continuance of client relationship, then small boy comes, remember, human resources. Then you ask the boy to get the mango, so engagement, performance, and finally monitoring. Okay. Now, after that, we saw the main points in this case, and you have to ensure that you're doing the chart which I've given in a proper manner. The chart becomes very important. So the key points, I'll just read through it from here. Please here. Leadership responsibility, they have said here, the firm's policy procedures are made by the CEO or the firm managing partner. They should ensure that there is a system of quality control. The firm's leadership should encourage an inner culture that recognizes high quality audit work. Okay. Ethical requirement basically means that the firm should have should work with ethical requirements kept in mind. They should work with integrity, with independence, with objectivity. All these things should be there. So they're given here the policy and procedures should comply with the relevant ethical requirements contained in the Code of Ethics issued by ICI. Fundamental principles of professional ethics. We had just done that answer. That is called copy. Remember, confidentiality, objectivity, professional competence, professional behavior, and finally you have the integrity point. Copy. Next, independence is an important matter for the auditor. Auditor should always have an independent relationship with the client. So auditor should communicate his independence requirements to the client's entity, and his policy and procedure should always mention the requirement of independence. We should identify the threats to independence and take whatever appropriate action the auditing firm can. So if there is any threat to independence, the auditing firm should ensure that the threat to independence is controlled. Next, at least annually, this is important, this can come in MCQs, at least annually, the firm should obtain written confirmation of compliance with the policy and procedures on independence from all firm personnel required to be independent. So every person who is working in a CA firm who is required to be independent, from them at least annually, means yearly once, we should take a written confirmation in writing that they don't have any shares in any company, no relative working in so and so company, that they should give in writing. Okay, let's go further. Acceptance and continuance of client relationship is here. So auditor should acquire important information regarding the client while doing the audit work, becomes very important. For this, the auditor should first check his own ability regarding three things. He should have competence, he should have capability, and whether he will be able to comply with the ethical requirements. Second thing we should check is the integrity of the client. For checking the integrity of the client, we have to look at few factors here, and those factors are given here if you remember. Just a second. Okay. These factors are business reputation, you will check. You will check the client's business operations, how do they run the company, we run the organization. The attitude of the client's principal owners, key management, and those charged with governance, you will check. You will check the fees, whether the client is going for fees which is as low as possible. It can mean that they don't want the auditor to check more areas, because the more you check, the more cost it will incur, and they want you to wrap up the audit in a quick manner that will show that the client does not have proper integrity. Because see, if you're getting the audit done, might as well do the audit in a proper manner. Okay, but if the client is focusing on lower fees, it means you will not be getting the flexibility to check more areas. Next is limitation of scope in work. If the client imposes, then that is an indicator that the client's integrity is not good. If the client is involved in money laundering and other criminal activities, then the integrity is not good. And finally, um, the reasons for the proposed appointment of the firm and the non-reappointment of the previous firm. So why was the previous auditor of the client removed, and why they have appointed you? That reasons or evaluations you should check. Okay, that is basically this point here. Okay, let's go further. Next point is in relation to human resources. Let's do this part. The firm should establish policy procedure regarding human resources. See, good team members are very, very important. So the CA firm should look for people who are having capability, competence, commitment to ethical principles. There should be a proper system in relation to recruitment, compensation, training, career development, performance evaluation, and focusing on the development. See, whenever a person joins his work, he wants to continuously grow and increase his knowledge base. So they should emphasize on continuous professional development of the firm's personnel. Okay, let's go to the next area, that is in relation to engagement performance. Whenever the CA makes the his team get the work done, their policy should cover what? They should cover something called a briefing, telling the team what is to be done before the work starts. Supervision, during the work you should supervise, and after the work you should review. Consultation should take place in difficult and contentious matters. In some cases, the auditor may not be an expert. He should always take consultation of some experts outside. Significant judgments the auditor should review, and auditor should check, see whether these judgments are properly applied or not, and whether they are working as per that or not. Next is the assembly of engagement file, that is the audit file, as you know, should take place not more than 60 days after the auditor is reported. This we had also covered in the audit documentation chapter. So the audit file should be prepared in not more than 60 days after the auditor's report is made. This you must have done in audit documentation. We had answer number 10 if you remember. 8 was in relation to ownership, 9 was in relation to completion memorandum, and 10 was in relation to audit file. Okay, so if you remember chapter number 6 revision, when we had done 11 chapters, 11 areas were there in that chapter, 11 answers that you need to learn. This line was there in the 10th answer, that is audit file. Okay, let's go further. Monitoring, the firm should ensure policy procedures are relevant, adequate, and operating effectively and complied within practice. Uh, Such policy procedures should include an ongoing consideration and evaluation of the firm's system of quality control. So quality control should be there in place. That is basically what is monitoring. Okay. Let's go further. Let's see what is given in SA 220. Now, in this case, you will understand that in SA 220, you're doing something called as quality control for an audit of the financial statements. If you see, the main points are the same. So the main point that we just saw are the same: leadership responsibility, ethical requirements, acceptance conditions of client relationship. In place of human resources, they have given assignment of engagement teams, because the team members will go and do the work. Then you have engagement performance, and finally you have monitoring. Same points are there. Now, in this, let's do the content part. Whenever the person has a leadership role, uh, delegates some work, his actions and his messages are very, very important, because they should emphasize on something which I call it as spark. He should focus that we should follow, he should tell the team members that we should follow standards and regulatory and legal requirement that is thorough. We should ensure that the policy procedures are made and properly followed by the team members. The leader should encourage the client, the team members to give reports which are appropriate in the circumstances, and encourage them to raise concerns without the fear of reprisals. Means if they ask a query, you are not going to shout or insult them. When they ask your query or raise some matter, you are going to accept it calmly. That is what the leader should do. And finally, leader should make it very, very clear that quality is very, very essential in any organization. Okay, let's go further. Relevant ethical requirements are given here. Let's see this. Auditor should identify any threats to independence. The reporting by engagement partner or relevant person within the firm to decide appropriate action is very, very important. The auditor, for him, remember, reputation is everything. You cannot allow reputation to get tarnished, because then that years of effort will go down. So you should ensure that the team members are having good ethical background, the team members are working with care, the team members are not having any threats to independence attached to them. That is what the auditor should check. And sometimes it may also lead to withdrawal. If the auditor is not careful, the auditor may be forced to withdraw from the client's work. Okay, so you should be very careful. Let's go to the next one, acceptance and continuance of client relationship in an audit engagement. Let's see this. The firm should obtain such information as is considered necessary in the circumstances before accepting the engagement with new client. When deciding whether to continue an engagement, or in considering acceptance of a new engagement with an existing client. That is basically, normally it will be the second term, new engagement with a existing client. That is called as the second term. We should again check the same thing. It will be very similar to what we saw earlier. We check the integrity of the principal owners, competence of our team. We should look at our capabilities, whether we are ready to comply with the ethical requirements or not. Okay. Let's go further. Assigning engagement teams means which team members will you take for your audit work. You should ensure that team members are competent and they are capable and they are going to comply with the SARL part. SARL, as you know very well, is standard and regulatory and legal requirements. Let's go to the next one, that is called engagement performance. Very, very important. Whenever you are doing the client's work, you have to ensure that direction, supervision is done properly, and it is your responsibility, means you should review it also. So the CA, the auditor, should review the work of his team members. Next is for audits of financial statements of listed entities and those other audit engagements, if any, for which the firm has determined that engagement quality control review is required. The engagement partner shall do few things. That is, first, determine that the engagement quality control reviewer has been appointed. Basically, he'll check whether quality control is followed or not. We should discuss significant matters with the engagement team members or the audit team members so that we are able to look into that matter in much more depth, and also the matters that has been identified during the engagement quality control review. Okay. Finally, we should um, not date our audit report until the completion of the audit engagement quality control review is over, because till that time it means our audit work is not yet done. So till the engagement quality control review is over, we should not date our audit report. Let's see further in this. There are other points too. Just a second. Okay. In this part, last point is that, let's see this. That is monitoring. In monitoring, we have to document few things. See, monitoring basically means that we should ensure that all the important matters in relation to our auditing work is properly recorded, and we should keep on monitoring it so that our next time when we face the same client or some other client, we are ensuring that the work is done in a much more better manner. So we have to, what will we document? So they are getting to see what should we document. We should document the issues which have been identified, and we should document whether ethical requirements were complied with or not, and if some issues were there, how did we resolve that matter. Conclusions on compliance with independence requirement, whether we completed our independence requirements or not, and our discussions with the engagement team members. Conclusions regarding acceptance and continuance of client relationship, because looking at what factors did we accept the client's work, or regarding looking at which factors are we continuing with the client's work. And finally, they are given the nature and scope of the conclusion resulting from consultation undertaken during the course of the audit engagement. So any conclusion that we reached, we can always document it and ensure that we are reviewing it later by doing monitoring. Okay. That is given in this part here. For this, I had given you a big chart for the SA 220 and SQC1. You can go through it very, very carefully. Chapter is a simple one. It is not loaded. It is not heavy. It is a simple one. Just that you have to ensure that the revision is done properly. Okay. I wish you all the best. If you're keen in watching more such revision videos, please, 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 my request is comment in the comment section that you are keen in watching more revision videos, and then I'm also motivated to upload more videos here. Any new tricks that you need, any new help that you need, let me know in the chat area. What happens is when you put it in the chat area, or when you like the video or put it in the chat area, it acts as an encouragement or a motivation for me, and I can give you more and more content like this so that it is easier for you to prepare for the examination in a quick manner. Okay. All these are revision videos, in-depth explanation. Example, this chapter, the revision video which I'm giving it to you. In the class, we had done this chapter in around 5 to 6 hours. So you understand that much content is there in the chapter. That much explanation it is there. But this is just a compressed version so that there is a quick revision that can be done from the student side. I wish you all the best. Take care. See you. Bye-bye.